Let's analyze together long-term analysis, ENAGAS, fundamentals, technicals, and more. This is a Spanish company. We're talking about like the red electrica of the nat gas in Spain, a monopoly. They don't have competition, which is good, and also with a high dividend yield. Just read the disclaimer right here in the video description below, and let's get started. And also, follow us on TradingST to watch more content like this. It's very interesting to see this because we are watching here on the chart like the price dropping dramatically since 2016, and actually we're talking about the minus 52%. That's huge. But the thing here is like, okay, it's not a good one for the long term, definitely. But if we adjust the dividend, if we add the dividend in the chart, it's a completely different story. It's telling you that actually they are not losing money, but it's kind of sideways, as you can see. That's not good either, in terms of technical analysis. Okay, it's very clear the levels that you had to buy, and actually, obviously, right here is we had to hide indicators because that's without the dividend. But the thing here is like you buy it at the bottom and you sell at the top. That's the only strategy I see here, because for the long term, with a dividend yield, it's 8%, which is very good. But you have to compare this stock with something. So for instance, when I compare a stock, I usually compare it with an index, with the S&P 500, So we're gonna actually compare, for instance, S&P. We go to indices, S&P, SP. That's right. I'm gonna adjust the scale, So over the last, and this is interesting, because they both started back in September 2002. And right there you can see the performance is very similar, but it's not the same that you buy ENAGAS at the beginning in 2002 than today, It's like if you are zooming in, and you can clearly see how it's evolving the performance. Those who bought the stock at in 2015, look at that, the performance is completely insane in the S&P 500, but in the ENAGAS it's just a couple of, it's not very good. let's say it lightly in that sense. It's actually performing sideways even with the dividend. That's a dividend actually including in it. So it's not very good for the long term in that sense. It's better the S&P 500. So that's the thing. You are having a lot of risk in just one stock. It's not worth it. If it's not performing better than an index, it's not worth it. And though I like it, I may like it because it's an index, it's a monopoly, they don't have competition. But the performance is the performance, and the performance is not good. You can see here from the chart. And actually, we go to the net income. We can clearly see the same. It's like the net income is dropping every time a little bit. It's not positive either. And if we go to the, Wall Street analysts, they may think the stock is a good one for the long term. And look at the average. They think it's like more than 11% in terms of price target that they have. But if we go to the annual EPS and revenue, look at that. It's very, very poor performance. And actually, it's dropping every year. It's not positive at all. There's going to be a point when this is going to end. And probably right here by the end of 2026. It's gonna be the year like that this trend downtrend is gonna end, and we may think about having a new uptrend, but still it's gonna be slow. It's slow in the sense that the S&P is gonna perform better than this every time. It didn't happen in the past, and actually, as I showed you before, right now they are. They have a similar performance if you bought them both. If you bought them both at the 2002. So obviously you are holding them for more than 20 years, and they have a similar performance. But the last decade, in particular, of ENAGAS it has been like completely, it's not enough. It's not enough for we are expecting, for we are risking. We are risking, you put like, I don't know, 10,000 euros and your $10,000 is expecting like 800%. It's not going to happen here. It's not going to happen here like never. Probably it could take 5 decades and you wouldn't get that performance. That's the problematic thing with ENAGAS right now. Anything can change in the future, but right now it's not going to happen. We need to say better net income, which is not the case right here. And you can clearly see the last one was 65 million of net income. They even had losses back in June 2024, minus 300 million. So that's not positive either. But at least right now, we are going to expect like stable performance in the net income. We're going to actually, the EPS right here is going to be 0.30. That we will compare that with the previous one. It's going to be slightly better. You know, so probably 100 billion, 86 million of net income, something like that. And it's gonna be justified to see like some sort of an uptrend in the short term, maybe because it's gonna be up 13%. But then it's gonna hit this downtrend again. And that's the problematic thing that we have with ENAGAS. The general downtrend that we've been suffering since 2015, you know, completely insane, as you can see, minus 55% over the last decade. So that's a lot of risk. That's a huge downtrend, you know. So there is one strategy to buy it and sell, to buy and sell again and again and again, or just to buy it and hold it for a long period of time, expecting that it's going to perform better. At least you are getting the dividend. And that's one of the reasons probably the stock is holding with the dividend, you know. It's like in the sense that they have a huge dividend payout, you know. That's the only good thing about this one. That doesn't mean it's gonna have like a good performance over the long term, you know, better than an index. So that's why I don't like it probably, you know. I like the company. I like they have a monopoly. They don't have any competition, but you know, the net income is very stable, too stable, and it's worse than an index. So this is my opinion, of course. Leave your comment below about what you think about this one. Is it a good one to buy for the long term? Do you agree with me or not? Leave your comments below and see you in the next video.